There are two takeaways that I'd like to share today. One is that electrification and the direct use of renewable is a critical part of energy transition for the power market. Second is that looking into our long-term outlook from now to 2050, because of the cost decline and policy support that we see all over the world, that the capacity additions of renewable, so that's wind and solar plus battery, is going to account for 96% of the net capacity addition. So that's a very significant amount of investment that we're expecting from renewable resources.
We are here at the S&P Global Mumbai Forum, and what I was essentially talking about what's happening with global trade, right? If you look at what our view is, the geopolitical landscape has changed, and that's become essential to what's happening with global trade now. The traditional supply chain economist as well as traditional supply chain analysis has mostly focused on input, your labor cost, your energies, and so on. But now geopolitics has become a critical part of it. So whenever somebody is planning in terms of the long-term gestation of how the global trade would evolve, you will have to take into account what's happening with the geopolitical landscape, what's happening with the global tariffs, and so on. So that was the key thing which we talked about. We get a lot of questions from our clients talking about what's happening with globalization. Our view is globalization has certainly peaked, particularly for the East-West trades, right? And the second thing is there will have to be newer markets which will have to emerge to drive the global trade growth to the same level which we've seen over the last several years, or at least for the last 2 decades. Unlikely in that our view, because the East-West trade, which is primarily North Asia to the European markets to the American markets, that has certainly peaked. And the global trade growth multiples compared to the global GDP continue to compress. So that's the key thing which we were highlighting to our clients here this morning.
When we think about this world today, it's a world of uncertainty. It's a world where governments and policymakers, but as well companies, have to make decisions about long-term investments. Dealing with uncertainty is becoming central. So at S&P Global, we have taken an approach, or we have an approach based on scenarios. And what we are seeing here is that in the 3 scenarios that we have, plus our base case, one of the things that we see more dominant, and I was sharing with people today, was that fossil fuels will continue to be very important in that story. It's going to be the coexistence of fossil fuels continuing to play a key role, combined with a clear advance as well of clean technologies in the mix. Because when we look at the energy transition and we analyze if the energy transition has accelerated, is it slowing down, has it happened, is it not happening, what our data says is that basically it is happening. It is happening at a slower pace than what we would like, but it's still happening. And then one thing, when we focus more specifically on India, what is important to highlight is 2 things. In India, the story is going to be about renewables. Renewables are going to be capturing most of the growth, are going to deliver most of the new electricity that is going to be required. However, coal is going to continue to be very resilient. Coal is here, is part of the mix, and will continue to play a key role in order to provide the flexibility that the system needs. That said, in all the scenarios, excepting the most aggressive ones on energy transition, will result in India seeing an increase of its emissions. That, in the case of one of the scenarios, is going to be quite significant. So, more to do, homework to do, more renewables to be built, and an acceleration of the energy transition that will come with some challenges, but as well with a lot of opportunities.